Hello to everyone, my name is Gregor and welcome to our new episode Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I'll look at the dollar index, euro versus Aussie, cable, silver, crude oil, and also on Ethereum. So as you know, we are still here moving to the upside on dollar index. So I think that this is, of course, it has to do with geopolitical tensions. We are seeing the risk of moves, and also there's still inflation. I mean, just latest reports from Australia was also just another proof that inflation globally is still the main problem. So that's why we are keep seeing US yields on the 10-year trading towards 5%, and the dollar index remains in uptrend. But I still assume that sooner or later this recovery will slow down. I think that we could be moving here into either final stages of wave A, or maybe we are seeing prices coming here higher into the final stages of wave C, of a flat formation. So in either case, I think that 108 can be a very strong resistance. And why I'm highlighting 108 is because the recent drop here back towards these March lows, swing highs, and this recent 105.40 area has been made only by 3 waves. So despite some push to the downside, bears really didn't pull the prices lower much. In fact, we are seeing aggressive and sharp reversal to the upside. Currently already prices trying to break this upper line of this corrective channel. So I'm afraid that more upside here for the dollar is in the cards, and the opposite side of this, it means that US yields can still see can still stay in uptrend, while stocks will either stay sideways or even bearish. Also, one of the reasons obviously why we are seeing upward pressure on dollar index is coming from the euro, because you know that these two are correlations in correlation, very tight one, because obviously dollar index weights a lot of euro. So here what we are seeing also, it's a very nice ABC recovery that stopped at 107 level, and maybe this current weakness is also coming after speculation that maybe the ECB tomorrow will not be hawkish. In fact, there are speculations that they may not hike this year anymore, and maybe even they could cut the rates in 2024. So this is something that is driving the sentiment here, and I would not be surprised to see this recent free wave recovery fully retraced by the current drop, meaning that there can be another retest of these October levels here around 104.40. But then 104 level is going to be a very big major support on a higher degree time frame charts. Now, when we have ECB maybe potentially could really give us a proof that they will stay on hold for the next few meetings. And on the other hand, you have in Australia, where the inflation came to the upside, and on their airway recent speeches, they highlighted that actually they could hike more rates in Australia if that's needed. And latest inflation data could definitely be the reason why further hikes will be seen in Australia. So with that in mind, maybe the EURUSD could be a very interesting pair for potential break to the downside. I mean, you have potentially this completed corrective rise, and you are seeing the prices that recently retested the lower side of this channel. And if we can break this channel tomorrow, let's say we finish the day after the ECB, we finish the day out of this channel, then I'm afraid that much more weakness here could be in the card. So this pair could be driven by the difference between central bank policy decisions between ECB and Australia. Now let's take a look also on pound. Now pound is also coming to the downside. It looks like that it should stay on the bearish foot here, because we have only corrective sideways price action here from the last few weeks, and I think that's a way forward. Could be a triangle, but eventually, I mean, sooner or later we should see more weakness for wave 5. So I'm looking for a break below 1.240, then 1.2 psychological level is the first support to watch, but I think that much more important downward projection can be at 1.1817. Okay, that's this swing high going back to March of this year. So this is going to be a very important to retest this potential sharp drop. Now let's take a look on silver. Now metals, because of geopolitical tensions, as you know, are in recovery mode. And firstly, I want to bring in this monthly chart. Notice that we are still sideways here, but I assume that we could see the move towards the upper side of the range. So $25, $24, I think, are very probable to see on silver. Also, I'm looking at silver from this basic technical perspective. Notice that on this monthly time frame, we can also have a deal with a bullish head and shoulders formation. And recently, we just stopped at the lower side of this channel, if you want. So it's actually the parallel line of the neckline. And since we have seen a very nice move to the upside, I just would not be surprised to see more gains here to retest the neckline. And then let's see if the neckline is really going to be broken or no. So in the short term, even if this could be just a temporary recovery, I think that more upside here can be seen for a wave D within a big triangle. Looking at the 4-hour time frame, this is probably the most important chart at this stage. This recovery is impulsive, right? Because it's a very sharp move that completely erased the previous losses. So I think that this is a bottom formation and that we could be now looking to complete wave A, and you're now in a wave B flat, or maybe wave B will be a little bit deeper, but definitely very strong support would be around 22.30 area. Also, here is another potential head and shoulders formation. This could be left shoulder, head, and now maybe the right shoulder. So this is definitely a very strong support. Okay, it was also the triple point support when you look back here from June, August, and September of this year. Okay, so you're now also in October, maybe the same swing support will occur. So I think that silver will see more upside, can find new buyers a little bit lower, but definitely invalidation level here is at 22.70. As long as this one holds, I think that there can be buy the dip scenario. Also, looking at the crude oil, I think that crude oil is making some very nice and beautiful reversals about we talked in our past updates. We are actually seeing a major break to the downside after our rejection from 78.6% FIB retracement level. And notice that this was a very strong drop so far, clearly breaking this not only out of a channel, but also below the first swing low. So whenever you're seeing the swing low broken, that's normally indication that the previous trend is over. Okay, so in our case, wave B rise is over. That's why I'm focusing now for more weakness into wave C. And much more important and ideal support for this wave C, well, the first one definitely maybe here at this gap going back to October 09. Or maybe then we have this former wave 4 that comes around $77 per barrel. So clearly there is more downside potential after any near-term bounce. And I would stick with this view as long as we are trading below $90 per barrel. And now finally, let's take a look on cryptocurrencies. As you know, we were looking for potential rebound on cryptocurrencies. Now Ethereum has made a very nice and deep pullback towards $1,500, and notice that so far we have a very nice rebound here, which looks like an ongoing impulse. Why? Because firstly, we have seen here this broken channel, which normally confirms that you are in a wave 3. But not only that, we also were able to see this broken wave 4 resistance. So I think that more upside could be seen here after this pullback. So 1756, which was the previous swing high, is now new support, and obviously invalidation level is at 1660 level, around there, because wave 4, if that's a wave 4, correction should not step into the territory of a wave 1. Okay, otherwise the wave count will be invalidated. Okay, so I think that more upside here is possible. I think that we could retest the upper side of the channel at around 1900, and then if we see a major breakout, then I think that we could even attack firstly 2000 level, very big level, and then obviously I would be looking even towards these 2023 highs. Traders, thank you very much for your attention. I hope that you enjoyed this video, and talk to you soon.